Fundamentals and objects of bookkeeping, transactions, debit and credit, balancing the account, types of accounts, and the rules of debit and credit. Bookkeeping definition. Bookkeeping may be defined as the science and art of recording business transactions under appropriate accounts. The objects of bookkeeping are to record the financial effect of each business transaction and to record the combined effect of all such transactions of a given period so that the net result of the trading as well as the accurate financial position of the trader may be ascertained. What is business transaction? Every financial transaction involves a transfer of money or its equivalent from one person to another. It must necessarily, therefore, require two parties for its performance and may mean either the receipt of a benefit in shape of cash, goods or service or the imparting of such benefit. Therefore, in order to clearly indicate whether any particular transaction has resulted in the receipt of a benefit or the giving of a benefit, it has been found necessary to divide each account into two sections. One section, the left-hand side of each account, is thus utilized for the recording of transactions in respect of which benefit has been received by that account, and the other section, the right-hand side section, for recording transactions in respect of which benefit has been imparted by that account. In this way, the total benefit received and imparted by each account may be readily perceived by looking at both the sides of that account and the ultimate position of that account as to whether the benefits it has received are in excess of the benefits it has imparted with or vice versa may be easily ascertained by adding up each side and striking a balance. For a clear understanding of the double entry system, it is necessary first to bear in mind that the following factors are common to almost every business, namely 1. That the trader has to enter into business dealings with a number of persons or firms. That he must necessarily have some goods, cash, furniture and other assets or possessions in which or with the help of which he may carry on business. 3. That certain expenses such as office rent, salaries to staff, advertising, printing and stationery, etc. must necessarily be incurred in carry on the business, and that there must be certain sources from which the income of the business is generated. Types of accounts. It follows therefore that in order to keep a complete record of entire transactions of any business, it would be necessary to keep the following accounts. 1. Personal accounts. An account of each person or firm with whom the trader deals. 2. Real or property accounts. An account of each property or provision dealt in by the trader in his business. 3. Nominal accounts. An account of each head of expense or source of income. Personal accounts. Personal accounts record a trader's dealings with persons or firms. A separate account is opened for each such person or firm, and by recording therein particulars of all transactions in cash, goods, etc., as may have taken place between the dealer and the person, the farmer can readily ascertain at any time the amount owing to or by that person to him. On the debit side of each personal account are recorded the transactions in respect of which the person becomes the debtor, and on the credit side those in respect of which he becomes the creditor. In other words, the account of each person or firms is debited with any benefit such person or firm receives and is credited with any benefit such person or firm imparts. Property or real accounts. Property or real accounts record dealings in or with property, assets or possessions. A separate account is kept for each class of property such as cash, stock, plant, machinery, furniture, etc. So that by recording therein particulars of each such asset received or given away, the trader can ascertain the value of each asset on hand on any particular date. When any asset is received, the amount is entered on the debit side, left-hand side of that asset account, and on the asset being given away, that asset account is credited. A debit balance on asset or real account on any date would mean the value of the particular asset in hand as on that date. Note: in practice, there cannot be a credit balance on a real account except when the asset in question has been finally disposed of at a profit. Nominal accounts. Nominal accounts record a trader's expenses or gains. A separate account is opened for each head of expenditure or income such as rent, salaries, wages, printing, stationery, cartage, interest, discount, commission, etc., so that the trader can see the amount expended, lost or gained under each heading. Each such account is debited with an expense or a loss is incurred and is credited when there is any gain. Nominal accounts. A debit balance on a nominal account would mean that the expense or loss under that particular head has exceeded the income or gain from that head and would then represent a loss. A credit balance, on the other hand, would mean that the income or gain from a particular head has exceeded the expense or loss under that head and would represent a gain. Rules of debit and credit. The above rules of debit and credit in regard to the three classes of accounts may be summarized thus. Personal accounts. Debit the receiver and credit the giver. Asset or real account. Debit what comes in and credit what goes out. Debit all assets and property and credit all liabilities and provisions. Nominal accounts. Debit all expenses and losses and credit all incomes and gains. It should be borne in mind that these rules never vary and will have to be rigidly followed under a conceivable conditions. Twofold effect of every business transaction. Another important point that needs to be stressed at this stage is that every business transaction has a twofold effect and that it affects two accounts in opposite directions. And if a complete record were to be made of each such transaction, it would be necessary to debit one account and credit another account. Thus, the record of every individual transaction at once creates a debit and a credit. It is this recording of the twofold effect of every transaction that has given rise to the term double entry. In order to decide which account is to be debited and which credited for the purpose of recording any particular transaction, the first important point is to see which classes of accounts are affected by that transaction. In the next lecture, we will discuss about some of the transactions and learn how to record them in double entry bookkeeping and the advantages of double entry bookkeeping.